The market has spoken. Ethereum is dead. What we see over here, that's Ethereum's relative performance in all of crypto. It's the Ethereum dominance. It measures in market cap how big is Ethereum relative to the rest of crypto. And the trend has been not pretty at all. From the end of August last year to today, Ethereum underperformed the crypto space by 37%. And that happened while the rest of crypto already crashed. So Ethereum just crashed even more. Now, if an asset keeps underperforming, at one point there has to be a price level where the risk versus reward is worth it, where we are low enough in price that even if the momentum is negative, it's still a good bet long term. But where is that price level? When we zoom out on that chart, we can see that Ethereum's dominance bottomed at around 7.2% historically. That was true in September of 2019. It was also true in April of last year. This is when Tom Lee of Bitmine started to buy Ethereum through his treasury company. So the first rally was in anticipation of the merge, right? The move from proof of work to proof of stake, which happened over here. And the second rally was the treasury story. If we were to bottom again at the same level, Ethereum would underperform by another 22% to then hopefully turn around. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and it is mainly through trading the crypto markets. Over the last 2 years, I started to publish my trades in real time, and we made 47% per annum while the rest of crypto went down. Most people lost money, but we are currently close to an all-time high if we include the current open positions. Every single trade is updated on this website here in real time as well. The website is linked down below. We currently have 7 open positions, and this is the trade history. I don't think that many people in the crypto space are willing to share their entire trade history, but I want to be as transparent as possible. Now, why did this Ethereum treasury company story suddenly come to a halt? Why didn't Ethereum continue to outperform? One of the reasons, I believe, is that the rate of purchases has slowed down. Up until September of last year, the purchases were very quick. But since then, it was mainly Bitmine that continued buying, and the rate of purchases slowed down significantly. Just have a look at this overview page, right? Strategic reserve.xyz. Bitmine is the only company that has made any change to their holdings in the last 30 days. Scrolling down, we can even see how one treasury company has offloaded a lot of ETH. Now, we've already talked about the potential downside, but in order for this to turn around and to buy against the general momentum, against the masses, against the market consensus, we have to make sure that we're buying an asset here that's really on a discount. And it's not a network that's just dying away. So let's have a look at the data. Here is Ethereum's on-chain volume. So how many dollars get transacted through the Ethereum network over time? And clearly, this is going in cycles. It tends to peak at around 15 to 20 billion, and it can bottom out at very low levels. Now, the recent bottoms have been a bit higher compared to the prior bottoms. Still, this is not obviously a long-term growth trend. It's rather a boom and bust cycle. Now, that's for the daily transaction volume. Here we've got the capital that's on the Ethereum chain. That's also fluctuating, and it also has a somewhat predictable top at around 100 billion. With the last bear market, we bottomed at 20 billion. Currently, we are a bit under 40 billion. Now, a lot of those booms and busts in those metrics is just due to the prices going up and down. It's not necessarily related to the usage of Ethereum directly. We have to adjust the numbers to get actual usage. So let's measure the capital on the Ethereum chain in Ethereum tokens directly. Then we get this chart. Now, unfortunately, this does not look that much better. As in, there is still a ceiling of how much Ethereum is used in decentralized finance. There was very little growth, if any, over the last 5 years. Now, that's in terms of capital, but in terms of the number of transactions on the ETH chain, that is actually going up over the years. So this chart clearly indicates that Ethereum is not a dying network. If the price is low enough, if we fall by another 20%, and at the same time the number of transactions continues to rise, this might be a good buying opportunity at those lower prices. Now, this number could also be manipulated in a way, because this is not just organic transactions. There are arbitrage bots, there is algorithmic trading. So let's instead look at the number of new addresses on the Ethereum chain. This, of course, also fluctuates, as in it goes up massively when there's a hype in crypto, then it dies down again. But very long term, the chart tends to trend upward. Now, when we've got new addresses all the time, some of those addresses should stick around and become long-term adopters. So this is the number of active addresses. And this is exactly the kind of chart that we want to see. We don't want that the number of active address chart mirrors the number of new addresses, because if that was the case, it would mean all the new addresses that try Ethereum, they churn very quickly and they never come back. But since the number of active addresses is growing somewhat consistently over time, as in the peak in 2018 is now the same as the bottom today, I think it's reasonable to state that Ethereum is, to a degree, a sticky product. Some people that started using Ethereum will continue its usage years in. And since you're watching this video, you're probably one of them. You might have started using Ethereum years ago. You might still do occasional transactions on the chain. So I tried to figure out, is there actually a trend here? What's the ratio of active addresses to new addresses? How sticky is Ethereum? Here is that chart. There is fluctuation, as in the number of active addresses divided by the new addresses. It's not a straight line up, but the regression, right? The dotted orange line, it has a positive slope. And that's what we want to see. We want to see that there's more active addresses as new people enter the space. Now let's have a look at the demand and supply dynamics, because that's in the end what determines the price, right? It's the marginal buyer, it's the marginal seller. If there are more buyers going forward and then sellers, price goes up. Now, Ethereum is a proof of stake blockchain. So we can lock away our Ethereum and get some return from that. And in principle, supply that's stashed away should be good for the price. Here is the number of total Ethereum that's currently staked. That's just the raw amount. Here we've got the percent share of ETH that's being staked. And that grew very consistently up until the middle of 2024. But since then, it's flat. As in, there's no more Ethereum that's getting removed from the circulating supply. If that chart was to continue to grow further, that would be much better. Over the last 3 months, we unfortunately rather saw a decline, something that hasn't happened before. A decline in staked Ethereum means that people that used to be long-term holders of ETH now exit the ecosystem. And how can we blame them, right? Ethereum has just been an extremely poor performer over the last months. But maybe those people will also come back again once the asset is just cheap enough. Many metrics have stopped growing. They have rather stalled. Here is the number of active Ethereum validators. So the underlying infrastructure of ETH, it has now matured. And since the staking reward is so low and it continues to decline, it's currently below 3% APR, it will not attract any additional staking. The reason why staking rewards decline is because less gas gets burnt on Ethereum over time. And that means ETH has become an inflationary token again. When Ethereum moved from proof of work to proof of stake, there was actually so much usage of the chain that ETH became deflationary. So there was a lot of burning happening, and that burning was quicker than the staking inflation. That has turned around in the middle of 2024 though. This is the chart in a bit more detail since the merge. The first 1.5 years were very positive for tokenomics, but then afterwards, the inflation rate is now very comparable to the one of Bitcoin at roughly 0.8% per annum. And Bitcoin has the big advantage over Ethereum that its tokenomics will improve again 2 years from now. Then we get the halving, and then we only have 0.4% inflation. The question is, will the tokenomics of Ethereum get upgraded again? Because otherwise, 2 years from now, its tokenomics will be worse compared to Bitcoin's. So why did the staking rewards go down Why did Ethereum become inflationary? While at the same time, the number of transactions long-term is going up. The reason is that the average transaction on Ethereum now costs much less than it used to. On the one side, that makes Ethereum more usable. If you have been around during the NFT hype, you might remember it cost hundreds of dollars just to mint an NFT. That's now very different. On the other side, that of course makes the staking rewards very low. It's two sides of the same coin. Now we are not discussing about the short term. I think the short term is quite clear. Ethereum is having a very hard time outperforming the market. The only question is, does it make sense to take the contrarian bet once we are close to the 7% dominance mark again? And I think the answer is yes. Ethereum is still more than half of all of decentralized finance across all blockchains. Hyperliquid has been growing very quickly. It offers derivative contracts, levered bets on cryptocurrency, on traditional finance. It has been the success story this year. Still, Ethereum is 25 times larger in terms of TVL. And while the asset clearly goes through boom and bust cycles, that can be seen as an opportunity if the price is low enough. And so if you want to follow what I'm trading, then feel free to check out the premium membership. In the link down below, you will get this page over here. This gives a free premium trade. There's no payment requirement. There's no credit card requirement. Just put in your email and I will send you my free trade. That's a trade that I currently hold. That's also opened by the premium members. Besides the trade, there's also a tutorial video that explains how to set it all up. Again, if you don't want to get wrecked in this market and take advantage of the next, hopefully even stronger recovery while managing risk, then feel free to check out premium. But again, you can make your first money without spending anything. There is one trade that I give away for free. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.